What's up traders, Tom here with another video. Today we'll be talking about the latest stock market news as well as our technical analysis levels for the S&P 500, Nasdaq and VIX right now. The stock market is approaching all-time highs, but are we starting to see the market begin to coil ahead of the next big move? Stay tuned. So as we always like to do together, let's take a look at what happened yesterday in the stock markets. And for anyone watching this, this is a good way to get a bit of an idea on the current distribution and movement into each sector in the stock market. So here we have the heat map of the S&P 500, and we've been talking about how there's been a bit of a general movement going on. Yesterday was pretty mixed, and we can see that straight away. Some stocks are up, some stocks are down, and overall there's no clear direction. But what we do see over the last week is that we see that the FANG stocks have started to be less in favor and profit taking is occurring on these potentially semi-parabolic stocks. I still think Apple is one that we want to be looking at over the next coming weeks, as Apple is fast tracking itself potentially up to $500, and it may stop just before that zone, and then that may be the market that we want to be looking at to give us an indication for the Nasdaq and the S&P 500 moving forward. Another thing that's been happening is that movement into value stocks continues. All of the banks, the insurance area, industrials, and of course aerospace, unloved sectors are becoming the value plays and the movement in the market. Why is this? Many people believe we're out of the current recession and we're moving towards potentially recovery. Now, we don't know whether that's true or not. Obviously on this channel, we've talked about how many dire economic situations there are, but the Fed has certainly stopgapped and fiscal stimulus has certainly plugged some of those GDP holes. And for the stock market right now, where else are we going to look at value? Well, it's certainly not going to be in these growth stocks such as the FANG ones. Another thing that happened this week is, of course, Cisco reported, and it reported poorly, and that's hurting certain areas in the market. But more importantly, it could create value soon for people looking at that particular stock if you think it's going to be turning around. So what about the technicals? Well, let's look at the Nasdaq together and see what we can figure out what's going on in the market right now. One of the things that's clear is that the stock market is in the Nasdaq is slowing down. It's starting to coil or move in ranges ahead of the movement up. We're not seeing that just kind of parabolic movement that we've seen recently. When we go to things like a monthly, and on this channel, we always like to talk about the top-down approach, going through the monthly to the weekly to the daily. So if that's something that interests you, remember to subscribe and of course hit that alert button, where we go through and we really understand the movement in the markets right now. So these market movements are incredibly fierce in terms of parabolic to the movement up. The candles are getting bigger. The movement is getting huge. And we've talked about how parabolic moves often lead to huge blow-offs. But the Nasdaq is only one section of the story. Another thing that we've been talking about is that it's quite far away from its 20 moving average. And we talked about that in a previous video this week. This shows us that we are not at the normal kind of pace that we expect in the markets, where the market goes up, has a pullback, the market goes up, has a pullback. So we could be seeing some further coiling on the Nasdaq as we await more what the S&P 500 is going to be doing technically. Another thing is the VIX. So what is the volatility index telling us? Well, the volatility index that we always discuss on this channel usually sits within a range, and that range is usually under the 20 level. You'll notice I've got this horizontal line through the VIX on the monthly over time. Why is this? Because only a very small period of the time, generally speaking, will the volatility index remain above the 20. And when it sits under this zone, the fear is out of the market, and it's time really to potentially be always looking for the long opportunities and of course the dip buying. Right now, what are we seeing? Well, the market came down to the 20 on the VIX and quickly rejected that with a sharp increase in volatility. So the 20 is clearly a point to watch, and it's interesting that we're hitting the 20 at the same point as we're hitting all-time highs, potentially on the S&P 500 stock market. So the longer we see a market coiling, or the longer it creates a structure for, what does this mean? It means it's winding up, and when it gets through either the buy side here, the volatility increase side, or it gets below, usually the movement is quite fierce. This helps us gain an understanding that usually markets reach key points all at the same time. We've seen what happens when things go parabolic with gold and silver recently with those huge blow-offs that occurred. And we talked about this week how we expect them to go up and then probably sell off again just because of the nature of that type of event. But the VIX and the S&P 500 hitting very similar kind of key points at the same time points to us knowing that we're hitting critical levels at a very key point. So let's take a look at the S&P 500 together. Here it is. We've got the previous pre-virus highs over here, and we have just achieved almost getting to the same all-time high. What is this below? It's below the psychological 3400 zone. So what does this mean for us as traders? Well, we've had a full V-shaped recovery in terms of the market has recovered very quickly, very aggressively. What does this possibly point us to? Well, we have to look at history and see how other smaller V-shaped recoveries have done. Well, over here in 2018 to 2019, we had a V-shaped style recovery, a fairly quick sell-off, followed by a very nice move up. When it went to all-time highs, what happened? A dip occurred and the market came back down to a previous level of resistance, which acted as support and a buying opportunity or a dip buying opportunity. If we continue to zoom this out and we go all the way back to the GFC, again, that was a little bit slower in terms of recovery than we've seen right now, but the fall off was even bigger, so the recovery was going to take longer, of course. So why do I talk about the GFC or global financial crisis? Well, it gives us as traders and investors a better understanding of what can happen over these points. So let's take a look at this previous high over here and then think about what happened around that break. Well, around that break, we saw a coiling event. We saw several weeks where the market basically stayed range bound and then broke out higher and moved quite aggressively for a few weeks, giving some nice opportunity. But more importantly, it then dipped back down and the previous resistance acted as support and a dip buy. Why is that important? Well, it means that investors don't need to necessarily have FOMO. Why don't we need to have FOMO? Well, we don't need to have FOMO because when the market breaks to all-time highs, it generally will come back down and it will test the previous point. We also have seen in the other V-shaped recovery from 2018 to 2019 that the market coiled and then sold off into a dip buying opportunity. So right at this point, does this create us a great area of buying or selling? It actually creates zero opportunity. And that actually gets me excited about the stock market. And why is that? Because we're going to have a very nice opportunity either way moving forward. It's one of these key levels, and we always talk about key zones and key price action levels, where while you may not do anything right now, you will be given the opportunity to make a decision whether you're long or you're short in the stock markets relatively soon. And the longer it sits at this zone, the better that opportunity generally will be. Another thing I want to point out is that this all-time peak of the GFC was very similar to what we saw pre-tech bust. So actually the market, for anyone that hasn't looked over this chart before, came to a high, sold off during the tech bust, and then recovered back to a very similar high. So we can see the damage that can happen from all-time peaks. Now, obviously, every situation is different, but this still doesn't change the fact that usually when you see these V-shaped recoveries, just like we saw here, even if it breaks through, it pretty much generally will dip back and give you the easier, more conservative entry. So it offers us as traders and investors the ability to have no FOMO and sit back, relax, and take advantage of the situation when it comes to us. That in many ways is the difference between professional investors and traders and unfortunately retail investors like you or myself. We usually fall into the trap of the FOMO, and I'm sure everybody out there has a story about where they fell into the FOMO trap before. So what else makes me think that the S&P 500 might be reaching a point of critical resistance? Well, it's actually pivots, and I don't often talk about pivots on this channel, but we're just about to reach a pretty key critical pivot here of the second resistance pivot for the month. So this is the monthly R2, and the monthly R2 sits at a point of 33.96. Now that is where exactly we sold off yesterday. Notice also the second R2 pivot before the crash was reached at 33.85 and it sold off. Very rarely will the stock market move above R2 or of course R3 pivots. It's just not usually what happens, and the market usually requires an incredible momentum to get there. Look on this sell side during the current crisis. What happened with the pivots? It got through, of course, the S2, but it did not break the S3. And this shows you how important these key monthly pivots are. And I always encourage people to use as many reasons, to many good technical reasons, to find out whether they should be in a trade or not. So the monthly R2 has been reached. We have found resistance so far, and this would be a point where you usually see that consolidation or at least some form of sell-off where the market will start to coil or range. What about the 4 hour though? What's that telling us? Well, clearly we're forming a point of resistance before that key psychological 3400 zone as well. The market likes to kind of look to key psychological levels. Previous high, did we see it hit the 3400? We did not. It barely almost got there and then sold off. And that's why I say whenever you're looking at profit, if you're looking at a share that's about to reach $100 for the first time, do you think you'd be taking profit at $100? I don't think you would. I think you should be taking profit at 99 something, because what usually is going to happen is the market will come up, it will reach just before the 100, sell off, freak everybody out, freak all the retail investors out, and then it might go on. And of course, the next time it reaches $100, it's most likely going to blast through that zone. So that's why this is such an important zone right now. Are we going to see a blast very quickly just because there's so much FOMO and so much hype in the markets? Or are we going to start to see the coiling formation in the markets followed by a bit of a pullback? And where could that pullback be? Well, actually the weekly will show us. So if we go over here and we look at the current market conditions, the pullback is most likely going to be to a 3200 level, at least initially. Why is that? Previous resistances will become support, but more importantly, by the time this market's selling off, it would be coming back, and the 20 moving average, the dynamic support, the dynamic kind of area that the market likes to gravitate to, would be moving up as well. So they might intersect with the same point and become very good buying opportunities. Just like that happened before at the 3000, the 3200 may be the next portion of the dip. So something to be looking at and something to be always setting alerts for and learning about in the market. So if you enjoyed this video today, of course, remember to subscribe and hit that alert button. And remember, knowledge is empowering, but only if you're able to act on it. We'll see everybody over the weekend. Thanks very much for the support of the trading community. And remember, we do also have that competition on our way to 20K subs. So we'll be giving away $500 to any lucky trader or investor just for being a subscription member. And of course, if you like some of our socials, we appreciate that as well. Bye.